Let's quickly break down HUL's results because the stock is down this morning.
Yes, HUL stock is down in the morning, as you can see on your screen. Revenue figure, was a bit of a dampener. Overall, the results were pretty much like in line with what the street was expecting. It was a positive surprise on the profitability front, but revenue, Shweta, was below expectations. Now, as you can see on your screen, revenue was up about 4% on a year-on-year basis, coming in above the 15,000 mark. And in the year ago quarter, it was around 14,751 crore. Net profit was a beat. As I mentioned, we have seen a 2,717 crore net profit in the last quarter, whereas in the year ago period it stood at around 2,616 crore rupees. Margins have improved in line with what the street was expecting. It is up about 130 basis points compared to the year ago quarter at 24.2 in Q2 FY24 versus 22.9% in the year ago period. Now, looking at the segment wise growth, Shweta, the home care segment saw a mid to single digit volume growth. The home care segment was up about 3% on a year-on-year basis. The revenues were up about 3% on a year-on-year basis. Beauty and personal care segment recorded a 4% year-on-year growth. And the food and refreshment business also saw a robust growth of about 4%. As you said, the stock is down. It's trading with significant cuts. This morning, it is currently at 10 a.m. this morning. The stock is down about 1.45%, holding above the 2,500 mark. And if we look at the historical, price performance on a 1 month basis, this HUL stock is up about 3%. On a 6 month basis, the stock is up about 2%. But on a 1 year basis, that on a 12-month basis, the stock is currently trading 2% lower on a 1 year basis, Shweta.
As far as guidance from HUL is concerned,
Shweta, that
is a major issue,
exactly.
And that is what is hurting, I think, sentiments on the streets. HUL is saying that they are losing their market share.
And they're losing their market share to small and regional business, especially in the mass segments such as tea and detergent business. Now, the overall guidance coming from HUL, it's a dampener for the stock. I think that is one of the primary reasons why we are seeing a 1.5% dip in the stock prices, along with the broader weakness in the market. But ITC has also flagged some concerns about demand for its businesses. So I think that will be closely tracked. Also, what was the impact of
Is the rural demand picking up for HUL?
The rural demand has not really picked up, Shweta, and I think that is one of the pain points for HUL. Although, as far as second half of the financial year is concerned, it is HUL's management is cautiously optimistic on demand. Now, it expects the government capex cycle to pick up and the festive season to drive some bit of recovery as far as volumes are concerned.
So, perhaps third quarter would be crucial.
Third and fourth quarter, they are expecting some sort of a recovery because of the festive season, and also the wedding season kicks off around, I think, this December or January. So, probably Q4 also will have some of those numbers playing up in the volume and the revenue growth. However, they are cautious about the commodity prices first of all, and what sort of an impact the monsoon, now El Nino conditions had on the crop output, which we'll only see in this quarter and the next quarter.
In the third quarter. Yes.
Yes.
All right. So that is as far as HUL is concerned.